So up until now, really kind of throughout the lessons, we've really just been focusing on euro dollar, just primarily because I think it's quite useful for us to continuously be sort of studying that same section of price action, just so as we go through each lessons and we learn new concepts, and then we build upon each of those concepts, we can then keep going back to that same price chart and building that layer upon layer of confluence, and you guys can just kind of start to get really familiar with it and see how sort of you can still read price action right with just one concept, but then how we're bringing those layers in to increase our strike rate, refinement and risk reward and so on. But I think now we're kind of we're starting to really put all of those pieces together now. I think it's useful to go through different pairs, different sections of price action, just so now we can really practice putting that all together, and just for you to see that these really are universal concepts. They literally are understanding really truly how the market really moves, and you can apply it to every instrument. Now, that said, what you will find as you sort of potentially play around with other instruments, you test other asset classes, even potentially right outside of currencies. Although these sell concepts apply, there will always generally be slight nuances and differences, sort of in just how potentially the behavior and characteristics of how that potential asset class or currency pair may move compared to one that you are already previously used to. So that is why generally I do say, especially when you're starting out, to just focus on one pair and get very used to how that pair moves. Some pairs you may find that you can be quite aggressive and sort of strict, not strict, but aggressive and more tight in how you mark out your structure. So in terms of swing highs and swing lows, you would actually look at, you'd really zoom in and kind of pick, for instance, this weekly chart, we just zoom in, you would, for instance, call all of these swing pullbacks in a weekly chart, right? And that would be fine. And then other pairs, you actually may find that you have more success when you're a bit loose with your swing structure. So you would define, for instance, that as your swing high, that is your swing low, this would just be a weekly complex pullback, and then that would be one whole bearish leg down, right? Which would mean that this is just one pullback, and we've actually stayed bearish the entire time. Now, of course, that's still going to differ between trader to trader, but also some of you may find that you may actually need to kind of alter your approach slightly between different pairs. But of course, that will just come again with time and experience and just whatever way you like to do things. But anyway, let's dive into a pretty recent price action and trade example that we have on Aussie dollar that we've had at the current time, and let's just quickly run through the high time frame. So weekly chart, if we completely zoom out and we kind of just have a quick look at what's going on, the data feed on forex.com doesn't really go back that far. It's 2006, but roughly we can see, right, we took out this low, we obviously took whatever external range liquidity was below this low, but slightly tapped into a demand zone from prior years, and then that fueled this large movement to the upside, right? Then we come back down again, being in a pretty long-term bearish trend, and then around the pandemic at the start of 2020, we swept this large low here, and then had a very, very aggressive sort of V, almost sharp vertical retrace back up there towards the highs. So we came up into this extreme weekly supply zone at the top, which is obviously a very strong supply zone. One, because it's the kind of the origin of this sort of large long-term move, right, that took out these lows here, all of this trend line liquidity. It has plenty of inducement in front of it, right, with all of these weekly highs there. Obviously, as we came into it, we built some liquidity too. But what did it also do is very, very subtle. But if we actually just zoom in, and then we mark out the prior high, and then we drag that line across, I don't think that will appear on my settings. Just have to quickly flick through, mess around with this, make this visible on the weekly. Bear with, there we go, hop back up to the weekly. And what you can see, just as we know with one of the main reasons why we use liquidity, is to identify those zones that are created as they take liquidity as they are created, right? We have a nice sweep zone right at the top of structure with plenty of inducement. Always a very high probability area to look for either a weekly bearish pullback or even potentially that full-on reversal. Or if you view this as one whole leg down, then simply that was just a pullback up into the extreme to form a lower high, right? Change of character, and now we are potentially trending to the downside. Okay, I'm a little bit more, don't use the word aggressive, so I wouldn't necessarily call it aggressive, but I'm a bit more sort of tight with the way that I would define structure. That for me would have been the most recent high, that would have been that lower low, and then as we came up here, and we took that high, that for me would have been a higher high. Then we come up, we've pulled back here, and then I'm pretty much counting that as one weekly leg. Now you could be even a bit more aggressive than me, and you could count that as a weekly pullback and a break of the high, and that would be more than valid as well. But for me, it's a bit more of a daily pullback in that case. So with current price action, I'm essentially viewing that as a weekly pullback to this level, and then if we have a very clear weekly demand zone down here, right, refined to that last candle before the buy, that went on to break this weekly high over here, which I believe, yeah, it's going to go down to the daily. I don't generally draw on my weekly breaks of structure, but there we go. We know price took out the high regardless. So now where we are within price action, we've come into this demand zone. This is a pretty decent area to look for a potential higher low, or, you know, of course, if you're viewing price as bearish, then you can still use this as a bullish opportunity to look for price to pull back potentially up into some of these regions here to then look for that lower high and beyond. Now, one thing else to notice about this demand zone is it did actually take liquidity there, right? Okay, I'll have to put that down onto the daily, and we'll go drop down and look to the daily. But that's where we are with the current price action. We've come down into this nice daily zone. So if we take a look at how that zone was created, pretty similar to the one that we looked at on euro dollar, right? We had these equal lows, and then price swept those lows here, and then that fueled the move to break up higher, okay? To then get that larger sort of weekly break of structure. So now we're coming back into this demand zone. What we can start to do is refine our weekly zone, right, as we go down through the time frames to potentially see where price may react. So there's a couple sort of zones that I'd be looking here from the daily chart perspective. I would be looking at this wick, right, that took out that low, that swept that low, that then led to the break of the high. Of course, you can take the whole candle, and for me, the body of that candle was already mitigated anyway when we wicked back down. But also remember, if you're being very, very kind of strict with your definition of demand zones, technically it shouldn't be a buy before a buy, it should be a sell before a buy. So you can kind of use that knowledge to refine to the wick, using that fractal refinement, right, for the bearish lower time frame move that then led to that break of structure. So that would be, yeah, a very, very strong demand zone that I would definitely like to see price come into to look for a buy. But where also do we have? Well, if we kind of just go back a little bit, remember I always say look left and try and paint the kind of the story a little bit to build price action to see how it actually arrived at the point that you were looking at. So we obviously had this daily supply zone, not the best in the world. It kind of only took out that minor low there, right? It never actually took out the swing low. It only led to a wick break, but it is still valid supply nonetheless. What happened is price came into it, right, with this wick. You can then see that it reacted down, right, with that large doji, and then we came back up and then wicked break there. So I would definitely be looking at this large daily wick zone here as a potential zone as well. Obviously, it's pretty big there, but yeah, definitely a more than valid zone. So obviously it's quite big, so we can drop down another time frame and potentially look to refine that even more. But before we jump down, let's just take a quick look at potential targets on the daily, where we have this sort of most recent supply that led to this daily break of structure here. Excuse me. That daily boss there, right? So that would kind of be our first target, because of course we could look for longs within here, and it could just be a daily pullback to reject somewhere within this range supply here, right? And then we could continue to come lower before potentially then going, right, sweeping that liquidity before seeing the real move. So that's kind of be our sort of first daily target, but of course with the potential that the weekly could be pulling back up even higher, up to around these regions. So let's try and refine those daily and weekly demand zones even more, just to help us with accuracy. Now, if it kind of, you know, you're not entirely sure what's the purpose of us kind of trying to refine these and make these zones as small as possible, if, you know, we're not necessarily looking to trade them directly, because, you know, if we're always going to just wait for price to come in and then start to break structure to the upside, so on and so forth, why do we need to refine it? Well, good question, I guess, but the reason why we refine it is because the lower you go down in your time frames, right? So let's say we want to look for that first say M1, that 1 minute change of character, that 1 minute flip to then get an entry, right? That's going to be happening loads and loads and loads of times. So to avoid yourself, you know, entering in a full signal where price does that, but it's just a 5 minute pullback to continue lower, and you keep trying to catch a falling knife and take tons and tons of losses before the real move goes, because this is a huge sort of, you know, both of these daily zones are in the weekly zone. So we've really tried to nail it down to 2 zones here, but even this daily zone is massive, right? So the more refined we can get these zones, then when price actually comes into them, that means we can trade that first M1 change of character, right, or M5, whatever time frame you want to use, with a lot more confidence, right? Because it's very likely then that price is actually going to move from that refined zone. So digging into these daily zones here on the 4-hour chart, what can we see if we can refine the zones even more. Definitely like that 4 hour inside bar. Make sure I cover the lower wick, I should say, as possible. We can see, that tapped into here, and that was the origin of the move that then led to that flip and that break of structure. Probably also keep an eye on this zone as well, as that was the one, that kind of last point of demand that did actually lead to the break of structure. And then this one has already been mitigated. You could include the wick, but I'd probably prefer this 4 hour zone at that stage, but it's pretty much the exact same size as the daily refine wick that we've done, so I'll just leave that there. And you can either drag these across, or a quick tip, if you open them up, I believe you can, extend right like that, and it'll go straight across if you just wish to do so. But the way my chart OCD works, I kind of like the zone to end where I'm actually looking at, so yeah, I'm just going to drag those across. Anyway, so we can already see that that 4 hour zone has been disrespected, so we can delete that one now and concentrate on excuse me, on this demand level down here. So like I was saying, at this stage, daily and 4 hour chart is very bearish, but we're coming into this pretty strong weekly demand zone here, that took liquidity below that low and led to a pretty decent move there. So at a minimum, we're looking for a bit of a weekly bounce, but obviously we can start to play a much larger move. You can see that daily zone as well, couple of daily zones that we're looking at. We've now come into about the EQ of this daily zone, and that led to the flip and break of structure there, so that's a decent area as well, which we've then refined to this inside bar. That was the origin of the move that led to the flip and the break of structure, and then we have that sweep zone just below, which is also nice. So at this stage, what I would then be doing is dropping down to my lower time frames, and then just waiting for price to start to show bullish signs as we come into our demand zones. Now, of course, you can be doing this on the M1, you can do this on any time frame that you want, but as I always usually say, M15 is a pretty good time frame to kind of be a little bit more, I guess, safer, Wait for a little bit more, be a bit more conservative, and wait for price to start to show those bullish signs. So we obviously built up a big collection of equal lows there. We've broke down below those, so we can expect a bit of a pullback, now pulling back into supply and going lower. So at this point, the M15 is very much bearish, But now that we pulled into our refined demand, now we can really start to pay attention to price. And instead of necessarily don't have to wait for a bullish trend change, but you can just wait for that M15 change of character, right? If you want to be a bit more aggressive. So I'm just going to take price nice and slowly now, and let's keep an eye of what's going on. Okay, so this is where you have to be really kind of paying attention to details. Now, another thing as well, if I haven't kind of mentioned it enough so far, is if you look at the time at the bottom, right, this is around sort of 9 a.m. London time. So UTC +1, as you can see down here, right? That's the time zone my charts are set to. Now, this is obviously bang in the middle of the London session, and this is a great time to be looking for trading these major pairs, right? As this is generally when those high probability moves will occur, and you won't get full signals because volume is generally high, okay? So what have we done? We've kind of swept these relatively equal lows. Of course, they don't have to be picture perfect, but it's a nice bit of inducement coming down into our 4-hour zone. Now, change of character for me, right? We've had a movement down. This next candle, it doesn't matter that it's bullish. What matters is that it never broke this candle's low, right? So the 745 low, if you look up on the top left, right, this will tell you where the decimal coordinates are of each candle. So if we go on that first candle, see how the low is 71152, and then the next candle we move across, the low is 71156. So of course that means it never took out that low, so that counts as a minor pullback, and then we took that low. So because we took the low, that means this then is a minor high. So this is kind of how, if I'm looking at this live market and I'm waiting for that first M15 change of character, I will literally just keep drawing my line, and I'll keep dragging it down and dragging it down and dragging it down until we get that first change of character, right? So another thing as well, what do we have is we have some M15 supply here, right? Very, very minor supply, but it is there nonetheless. So let's draw this on. Okay, now starting to react, which is good. Remember, we always want to see that reaction. Pricing now going to try and take out the low. Does it take out the low? Not quite just yet. Still battling between buyers and sellers, and then boom. Not only do we get that change of character, but we also get, just drag this one down, that reaction failed, right? That's the reaction point where my cursor is now. We have now broken up above that, and we have the change of character, so we can show that as a sort of failed reaction, right? So what caused the failed reaction? Well, basically anywhere within this sell to buy that led to the break of structure. So technically you could look to buy anywhere within this range, and maybe we want to refine it a little bit more, and we want to look at this sort of last candle here, right? Because if you think about what you'd probably see on the M1 is you would have had supply here that then initiated down, pricing came back up into that supply, It then sold off with this doji, but then it got bullish again, right? So that's the last pivot. That's the last bit of demand that led to that breaker structure and led to that change of character. So if you wanted to do so, or if you wanted to wait for price to come down into here on the M1 again, you could then drop down to the M1, right? If and when price comes in here, and then again look for the same entry model, and then you could buy with a fair amount of confirmation, or literally you can just take this on the M15, and you don't even need to be that refined, right? You can enter on the distal, or you could enter right on the EQ to try and pretty much just instantly double your risk reward. But of course you run the risk of not being tagged in. So let's just be conservative and see how this plays out. So all right, just tagged in there. So what you can see is you would not have been tagged in if you took the EQ, but that's fine. Now, let's say you wanted to see a bit more confirmation. You didn't just want to change your character, but you wanted to see a bit more, maybe kind of, another sort of minor structural go here. And you wanted to see this high go, which we have now seen. So now we're really starting to see bullish momentum kick in. Maybe now you've seen everything you want to see and you've got a bit more confidence. So let's, pretend we're not in this trade for the minute. Or what I'll do is I'll just kind of drag this out of the way. Actually, I should just delete it so we can kind of focus on price action here. All right, so that was your first kind of entry, the more aggressive one, but now we've had a bit more convincing break of structure. What else did we also have, right? We had this minor area of supply, price came into it, it reacted, it failed to form a lower low, we broke up above the reaction, right? And now we are up above and we have that change of character. So obviously we can buy anywhere within that range, or we can kind of refine it to this candle here and then potentially look for an entry. Exact same thing again, right? You can enter on the distal, you could enter it on the EQ, just make sure it stops below, or you could wait for price to come in here and then on the M1 look for a more refined entry. So let's see if we get tagged in. All right, boom, price jumps around for a bit and then we get in. So even just looking at the M15 price action, what do we have here? Right, I can just see probably on the M1 is we probably had that change of character back into the demand, and then that would have been your nice little refined confirmation entry within there, and then you would be off, right? And then it's kind of just a couple of ways that you could have gone in and positioned yourself long just using the M15 chart alone, right? Obviously you want to wait for at least that M15 to then make a higher high before starting to think about kind of managing that trade. You need to give the trade a chance, to play out. So didn't mean to go that far. Head back to the M15. Done that on the wrong window. There we go, back here we are. Right, okay, so M15's taken off. Now I'm not going to go through every kind of single bit of price action here and look at every single opportunity to scale in or get another entry if you hadn't taken it, but let's just try and play price forward a little bit here. And remember that kind of first real high time frame target is to play the daily pullback up in and around this region, but we can also keep an eye on some potential 4-hour levels. So let's keep an eye on those along the way was the words I was trying to look for there. And then kind of have this inside bar, but it was mitigated. Then we have these wicks here, so we would have had that buy before the sell. So there's a few wicks here you can kind of keep a rough eye on, but this is what I'm saying, right? You don't always have to be perfect at picking these zones. What you can do is just let price action show you the way. Which one does price action kind of want to start to pull back from, and then you can just basically wait for those changes of character and yeah, just basically view it that way and let price action lead you the way. So let's play this forward a little bit. All right, we're just trending pretty nicely to the upside. Nothing too interesting as of yet in terms of what essentially I'm looking for here, right, is signals that the 4-hour chart kind of wants to pull back. So kind of seeing this along the way, we won't dive into every single trade example, but kind of how you want to be thinking this as price would be moving in the live market is obviously looking at old areas of supply on whatever time frame you're looking at to see how they initiate pullbacks, but more so to see where are they potentially forming potential flip zones, because we had the reaction, right? This was the pullback, and then if you wanted to scale in or potentially look for higher lows, right, this could be an area in which you could look to buy, and that's essentially how I would use old zones, right, in new trends. See, there you go. And there would be another opportunity to potentially look to buy, even though you're high up on the leg, right? When we're getting that higher time frame zone mitigated, momentum is often very strong. And that is where you can get away with being more aggressive, right? Buying quite high up in the leg. We've now obviously pushed up above that 4-hour zone as well. So just going to delete that for now. But you can see, right, this essentially would be, if I move this across, we have M15, demand. That has now kind of been the origin of that move. Of course, you could take the whole range as well, but let's just drag that across potentially for, future price action. Now pushing up a little bit higher, pulling back into demand. Let's see, are we going to get that change of character to the downside? Are we going to break down? Looks like that low is just about holding. Okay, it's swept that low, broken back up again. So we're just kind of having runs on liquidity here. Now we're pushing up in towards that 4-hour zone. So now what I'm really looking for is just to see price action kind of really start to break down at this point. So we kind of see we've had a clear bearish trend. We're kind of starting to sustain that now, right? So we've taken out this low, we've pulled back in, we've broken another low, we've come back in, right? Supply is holding, we've come down, supply is holding again, we've come down, right? So now we're starting to really get that bearish order flow. So let's take a quicker look at how the 4-hour chart is looking. Okay, so this is a really good reaction, right, from our daily, weekly, and 4-hour zone. Just going to drag that across. Training view has been a little bit glitchy, and this is what I really like as well. You see how sharp, essentially, that big V-shaped move is, right? That shows real bullish intent stepping into the market. And whenever you see a V-shaped move come back to your supply zone, that's not really a good sign that your supply zones are going to hold. You might get a bit of a reaction, but obviously, we're looking pretty bullish at the moment. Excuse me. So at the moment, we've come into 4-hour supply. So what do we expect? We expect a potential pullback. We can start to get that 4-hour change of character, and we may start to pull back. And then at any point, we want to be looking for where that 4-hour higher low is going to form, so we can then look for a pro trend move to either first position ourselves in, right, if we hadn't already taken this, or look for potential more scale-ins to really build on this position, right? Because at a minimum, we're expecting the daily to pull back, but with the potential, right, we could get that weekly move, and obviously the daily then could switch bullish. So we're still very, very early on the move here. So obviously we could look at price coming all the way back to the origin, and I would look at that if price came back that deep, but it's probably not that likely, especially at the start of the move with this amount of momentum. So clear 4-hour zone would be this area here. All right, let's just be a bit more unrefined and look at the whole range, because we would obviously look for lower time frame confirmations as we get into here. And then we also kind of have, this move here, right, where price has moved into it, pulled back and gone. It's not super clear on the 4-hour chart, so I probably wouldn't draw that on, but let's have a look in the 15-minute. Yeah, that's kind of roughly that area that we were looking at before, right? Came into this area of supply, it pulled back and then broke up higher. So what I'll be looking for is kind of any of these demand zones for price to come in and see how potentially they start to react. Now, even if you weren't using supply and demand, as I always say, remember, you don't actually need it. Of course, it helps us, but all you're looking for, right, is for bullish signs to start coming into the market again. M15's obviously switched bearish to facilitate that 4-hour pullback. We want to catch that 4-hour higher low. How do we do that? What do we use for confirmation? We wait for the M15 to start to switch bullish and so show potential bullish signs. Okay, so what time is this around? This is kind of around the Asian session, right? Middle of the morning in terms of London time, and then we start to break structure upside. So this is around 7 a.m. sort of Frankfurt open. This is where I'd definitely be at my desk at this point. And I'll be going to myself, okay, right, we obviously switched bearish to have that pullback. We're now switching bullish with a hell of a lot of intent on the M15, right? That's nearly a vertical move. Now, even if you hadn't have drawn this zone on, right, and you hadn't, been kind of, following price action the whole time and leaving your zones drawn on, this is the point I always try and make is if you come to your charts, obviously session time in good time, and you want to be looking to catch that high low, and you just see this move here and you had nothing drawn on, just look left, go, okay, what did this move originate from? Okay, there's obviously this candle here that took the size here, and then you can work out and say, oh, it's actually it caused that 4-hour supply reaction to fail. Yeah, that's a pretty good level. It had it took liquidity from those equal lows there. That's a pretty decent sweep zone. It's mitigated the prior range. So actually, if we follow the bullish order flow, this was the last sell to buy range that hadn't been mitigated, right? For price to come down to, that we had then this massive support floor here, right? That's another real decent bit of inducement. You can even have that kind of descending trend line like that, right? We just know tons and tons of liquidity is going to be building below here. What else do we have? We have big equal highs up here to target, right? So that's a pretty poorly formed swing high. So what do I mean by that? Generally, you want to see a nice swing high like this, right? Sharp move down, sharp move up, sharp move down. Here it's kind of just, messed around and then slowly drift away. What does that mean? It means it's leaving tons of liquidity for price to target. We also have this descending trend line here as well, right? Which price is then obviously trying to sweep. We also have that descending trend line here. You can draw it on everywhere, right? It's not super important to do this. It's just to understand kind of what is actually going on there. So we sweep all of that. We move into this real nice last zone, but more importantly, it's the aggressive in and out, showing big money is in there. But we don't just look for aggressive moves. What else do we wait for? We wait for a change of character, right? And in this case, pretty much I would probably classify that. Just have a look. Highs. Yeah, that would be a bearish trend. That for me would be a bullish trend change, not even just a change of character. Whoops, wrong one. So now the M15 has switched bullish. What also happened? Well, we had this pretty clear M15 supply zone. All right, let's buy before the sell that led to the break of these lows here. Price came into it, reacted. Remember how key the reaction is that we need to see, and then we can draw that reaction there, where that reaction then ended up failing, and then we have moved right to the upside. So now I've seen pretty much everything I want to see to give me high confidence that the 4-hour high low is in place. Yes, we haven't pulled back to where that kind of clear 4-hour zone was, but remember, we don't have to. This for me is super high probability. Regardless of all of that, you can see the price actions going in, and I'll be pretty confident now trying to look for potential buying opportunities. Of course, we don't want to just buy straight away. We want to look for price to pull back. So where are some potential areas price could go back to? It could come all the way back down to the origin down here, right? That's a pretty decent move. There's even kind of a fractal zone here where we had this movement down, right? You can see price pull back up. It came to the low, price came back into it, right? It reacted, and then we moved up. So yeah, that would be a pretty valid zone as well. But what do we know about zone refinements? We want to look for ones, right, that took liquidity, and that actually led to where that flip, that last point of supply that failed, and where we got that trend change. So yes, these are valid, and if price came down to here, I would definitely be more than keen to look at them. But I want to kind of concentrate on more recently where that move came in, right? So we can see that reaction, we can see it failed, so we could take that entire reaction like this, or we could refine it, right, down to the bottom here, right? Because what happened? Price took the liquidity, right, from below here, and then that led to that break of structure. Obviously now we've already tapped into that a little bit, so we can refine that to the wick here, and then what does that give us? That gives us some inducement above the zone, right? Now we can look to set a limit entry order below here, because it's very unlikely price is going to want to break this low here if we are going to continue, right? So you could probably even get away with a 2.5 pips up there, more than enough buffer just below that zone there, and that is looking like a pretty decent move. So we've taken liquidity, we have inducement, we have caused a failed reaction, right? We've caused supply to demand, supply to flip to demand, and that led to a trend change. So all systems go to then look for that entry for price to come in. And then yeah, I mean, when you get the zones right and you pick the right POIs, it's not surprising that you end up seeing those large moves as all of those orders are filled. Obviously we had a bit of inducement. On top of that, it's quite far away from the zone, so I wouldn't really be that concerned with it, but you can just see what's going on here, right? The lows get taken, big sweep. But yeah, that's just pretty much it in a nutshell. Pretty much a picture perfect example of how we combine those liquidity concepts with supply and demand, with market structure, how we position ourselves, understanding what's going on as price is pulling back, what we want to see to confirm that the 4-hour high low is in place, and then starting to obviously identify multiple valid areas of demand. But if we want to start to kind of really refine those, right, we look for the ones that took liquidity, the ones that have inducement in front of, and that's how we can get pretty accurate results. Obviously you've got just up to the next sort of swing high there, you've got 18R, but of course if you have done all of that hard work to position yourselves in the first 4-hour higher low, right, in what could be a weekly move, you are golden. You want to try and hold on to this with as much volume on your trade as possible, and really, try and swing this higher, right? And just see really, just how far you can push this, because this can have a lot of potential, especially when we start to take out, that first real daily supply zone, and now we've had a daily higher high. Now obviously what we expect is a daily pullback for price to form a daily higher low, but you should be pretty golden in price not coming much further than that and continuing, so on and so forth. So yeah, kind of just wanted to go over that. That was a really nice clean trade example of everything then there, combining all of the concepts that we use, right, with liquidity now into our market structure, into our structural and flip zones, and just really using them to add those extra refinements. But of course, I will say again, it's really not necessarily liquidity. If you're at a point where you're finding it confusing, or it's making you really kind of scratch your head and doubt zones that you were looking at before, just leave it for now. Concentrate purely just on supply and demand and market structure. But yeah, as you go along, you start to kind of focus on this a little bit more, it can really start to help you just potentially stay out of some traps and give you a bit more confidence for zones that you are picking if you see them do those liquidity sweeps and have inducement in front of the zone. So I'll leave that there. Hopefully you guys took some value from that, and I will see you in the next one.